Hey, what's up, investor? It's the People's Mentor here, Juan Pablo, and I'm here today to share with you the ins and outs of commercial real estate investing. First off, I would like to thank you, yes you, for always watching these videos and for always commenting. When you comment and you place questions about the video or future content that you would like us to create for you, we definitely appreciate it. I want you to make sure that we actually log all of those questions, all those comments, all those videos you want us to create into our system so that we can create a video in the future. All right, so let's get into the topic. Commercial real estate investing, baby. I love mortgages. Now, most people say mortgages is not sexy. Hey, our goal at 100% Finance is to make business, real estate investing look cool. And I think it is cool to be talking about numbers, mortgages, because at the end of the day, these banks are giving you practically 70, 75, 80% of the capital you need to invest. It's vitally important. Right? It's important for me as an investor as well. So let me rewind the hands of time a tad bit for you. Back in 2014, when I quit my day job, right? I quit my day job, so obviously I didn't have the W-2s to support or prove that I had income. I did have real estate, don't get me wrong. I had 30 rental units in my portfolio, but I didn't have a paycheck coming in no longer. So that kind of put me in a jam, so to speak, when applying for mortgages. But thankfully, I had great rapport with my mortgage lender, who taught me a thing or two of how to get qualified for mortgages. You probably heard me say this before in my previous videos, right? That commercial mortgage lenders, 80% of their underwriting, their focus, their emphasis on qualifying you for a mortgage is on the property. The income is producing, right? The cash flow. And 20% of their underwriting is on you, the borrower. However, you always have to make sure that, hey, even though the majority emphasis is on the property and the property has to be strong, has to be performing, you gotta put some emphasis on YOU, on you as well. Because the banks, even though the property may be cash flowing very strong, they still wanna take a look at you to see how you're performing. So speaking about your performance, let's talk about the first point. DTI, the debt to income ratio. That is the simple ratio to calculate. It's as follows, right? It is your gross monthly debt service or debt. It could be from your credit card installment debt divided by your gross monthly income. So let me give you a scenario. Let's say you have $400 in debt payments, total monthly debt payments. That could be from your credit card, maybe student loan payments and so forth. Let's say it's $400 total debt service, right? Your debt. And you divide that by your total monthly income. Let's say it's $1,000 a month. In that scenario, your debt to income ratio is 40%. Now, what is the debt to income ratio that most mortgage lenders prefer in the commercial space? Well, of course, every lender is different and they have different criteria. But just to give you a range, just because it's, it varies per lender, having a debt to income ratio of 30% at the low end and maybe max 38, 39% on the high end. So if you want a simple number, about 35% will be ideal. Many of our clients, they apply for business credit and use that as a source of funding for the multifamily deals. Now, this is a great thing. However, they find themselves in a predicament. Simply being, they obtain $50,000 in business credit, but they only have documented income of $6,000 per year. All of their money is off the books. And I get it. I too ran into that same predicament, right? When I did quit my day job in 2014, I couldn't qualify for mortgages on the strength of myself because I put a lot of losses on my tax returns, so I had to pay Uncle Sam a red penny, right? I thought I was being slick and smart and savvy. However, my mortgage lender said, hey Juan, well, unfortunately, dude, we can't qualify you for a mortgage. I said, why? I have great cash flow. I have great FICO score. Why on earth will I not be able to qualify? She's like, yeah, you got all those things working for you, but have you taken a look at your tax returns? You have so many losses. And she's like, hey Juan, I get it. You don't want to pay taxes. You want to reduce your tax liability. I get it. But unfortunately, those losses will not help you in qualifying for a commercial mortgage. Even though this property that you're about to purchase, Juan, is cash flowing nicely. It sucked to learn that lesson the hard way. And you might be facing that same lesson as well. You may have cash in the bank, that $50,000 you got from us through business credit, and you realize that, dang, but I have no documented income. How can I get around this? Well, it is kind of difficult. You want to make sure that you report your income. You have to report it, and you have to be very advantageous and have somewhat of a tax professional, because you don't want to deduct so many losses to to the point you can't get qualified for a mortgage. So it's extremely important that you have documented income, period, right? And if it's not you, then guess what? You have to reach out to a partner who can bring that documented income to the table. Because we get that situation happen to us, not, I won't say often, but it's somewhat of a reoccurrence, because they just want to make their money under the table, right? Avoid paying the tax guy. But hey, that's just not how it works with commercial mortgages. You have to make sure that you document your income. So you might be saying, well, hey Juan, I did document my income, and I documented $20,000 per year. Hey, it's not just a documented income. You also have to make sure you have a certain income threshold. And the income threshold for most commercial mortgages, they want to see at least $30,000. Right now, again, I'm no tax professional, so I'm not going to say you need to show $30,000 on your Schedule E's or Schedule C's or 1040s, none of that. Again, I'm not a tax professional, but you got to show that you have at least a revenue income coming in of at least $30,000 per year, right? So if you show a mortgage lender that, hey, I have proof of funds, right? I have $50,000 through this business credit card, but you don't have the documented income, or if it is documented, it's not showing at least $30,000, then that can pretty much hinder you from getting qualified for a commercial mortgage. Why is that? Because most mortgage lenders like to play it safe. Keep in mind, they'll be giving you 70, 75, 80% of the money you need to purchase that multifamily property. That's a huge risk for them. So as a result, they want to make sure that risk is calculated and is mitigated by you bringing either a strong down payment to the table, or you bring in what's called global income to the table. So what does that mean? Global income is a term just basically that we use in the commercial mortgage industry that states that, hey, does this client have more than one source of income? Because if this person has more than one source of income, they're less of a credit risk. So they have income from their W-2, from their 401k, from stocks and bonds, current real estate. They actually have a few dollars in the bank. They have some experience or what have you. You know what? This person is a safer bet, because worst case scenario, if this person has global income and the property goes south, I'm pretty sure they'll be able to keep this property afloat and pay this mortgage as a result of having more than one source of income. See, they want global income, but if you don't have one source of income because none of your income is documented, or if you have one source of income and it's only showing $6,000 for the year, of course, commercial mortgage lenders will have reservations. So it's extremely important. Get that DTI looking right, have documented income, and make sure that income is over $30,000 for the year. Now, let's say that you filed your tax returns or you didn't file your tax returns, right? And you might say, oh, well, how can I get around this then? I'm stuck, Juan, help me out. As the people's mentor, I'm willing to help you out, right? Because the same thing happened to me. When I ran into that situation where I had those losses on my tax returns, I was thinking, so what does this mean, Linda? That's my mortgage lender. I said, what does this mean, Linda? Does this mean that I have to wait 2 years to buy a deal so I can have 2 years of positive tax returns? Of course, I got partners to be able to bring the credit and so forth to the table, which I lacked, or the tax returns, which I lacked, and so forth. But I didn't want to wait a full 2 years to get back into the real estate game and buy more properties. So this is what I advise, right? And again, always CYA, consult your attorney, your accountant, and so forth, cover your assets, right? But this is what I advise. I highly recommend that you just amend your taxes or just get them filed to begin with. If you did file taxes, and let's say it is true, you've documented zero of the money that you got under the table, then just report it. The only downside is, you're probably thinking about it, you will have to pay taxes on that if you amend those taxes. But it's pretty much a decision you have to make. Okay, well, do I want to save this money and not pay taxes, or am I willing to pay these taxes and be able to acquire my first multifamily property? The choice is yours. You can amend those taxes, or you can just file your taxes to begin with. And at the end of the day, you're a grown man. You're a grown woman. You're an adult. Which adult don't file taxes, right? And I'm not judging you. I'm definitely not judging you, but I'm encouraging you to step your game up. It's 2019. I'm not sure when you're watching this. It might be 2028 by the time you see this. You're like, damn, bro, this is a good video, dog. You look totally different by then. But I highly recommend, whatever the year is, that you get your stuff together. Right, I'm gonna keep it PG. Get your stuff together. Make sure your paperwork is right. Dot those I's and cross those T's. Because these mortgage lenders like to look at the paper. But outside the paper, guess what else they like to look at? In paper, I mean the tax return, W-2s, 99, stuff like that. They also like to look at your numbers, your FICO score, right? Your FICO score is a reputation of your credit worthiness. Credit is short for credibility. They want to see how credible you are as a borrower, right? So credit-wise, if you're buying a property yourself, let's say it's a single family to a 4-unit, they have great terms. Like you can get an FHA, put 3.5% down payment, which is next to nothing, right? Great terms. But for the commercial world, if you have about a 680 FICO score, 640 maybe, but 680 preferably, you look great to mortgage lenders. Because the only thing they care about is this: will I have a safe bet with this person? Especially if you're new. If you're buying a multifamily property, you never invested in properties in the past, that will ease the lender's reservations if you happen to have the documented income reporting higher than 30,000, your debt to income ratio is 35% or lower, and your FICO score is a 680. So you got the juice right there. As long as you meet those criteria right there, you should practically have any problems qualify for a commercial mortgage, assuming that you analyze that deal. So we didn't talk about the property. We didn't talk about the cash flow, cash return, the debt coverage ratio. We didn't talk about the property. That's another video. We're just talking about you, because I would hate for you to have a sweet deal sitting in your inbox, ready to close. You joined our MAP program, got a property ready to close. Yet unfortunately, you still don't got your together where your numbers are concerned. Now, if you don't qualify for those 4 things I mentioned, the debt to income ratio, the documented income, a certain income threshold, let's say 30,000, or you don't have the FICO score 680, no worries. There's more than one way to skin a cat. You can still get started in real estate. Now, it might not be multifamily, it could be residential, it might not be buy and hold, it could be wholesale. At the end of the day, don't let one small obstacle hinder you from achieving your God-given right of being a property owner. I truly believe you can do it. I truly do. In fact, my team and I at 100% Finance are on this earth to give you all those resources you need to actually do it. What is that resource, Juan? I'm glad you asked. It's called our Share Hub. Go to 100percentfinance.com. We have many different tools like deal analyzers and great tips and so forth that helps you get qualified for financing. So that way, you too can be a financially free, independent real estate investor. And that's what we're here for. We want 100,000 people to become financially free through multifamily investing. And guess what? In addition to the Share Hub, in addition to the team we have here at 100% Finance, I can guarantee you this. If you watch at least, if you spend at least, let's say 5 minutes a day watching your videos, going to our Share Hub, booking a call with us, speaking with our cash flow advisors, I guarantee that you will get a property within the next 365 days or less. You might be thinking, 365 days, that's a long time. It ain't no long time. Think about what you did last year to now. Did you get a deal? Probably not. But if you spent at least 5 minutes a day working on your craft, filling your mind with great knowledge, with the technical knowledge as well as the conceptual knowledge, as well as being motivated, in a short matter of time, you too will be a cash flow advisor. You have your own YouTube video advising everyone else who's watching me. Please believe. Now I want you to dedicate that 5 minutes a day towards watching these videos. All right? Because to be honest with you, the secret to my success, that's all I do every single day. If you don't mind showing me over here, read. Every single day, I read. You see right here, I read. So you see a couple books right there, and I journal every day. I'm talking, when I say every day, I'm not exaggerating. I mean Monday through Sunday. There's not a day go by where I don't exercise this thing right here. In regards to my craft, in regards to spirituality, being motivated, that's what keeps me going. Similar to Zig Ziglar, right? He said, motivation is like a shower. You gotta do it daily. You got to, because you gotta wash that filth. All your colleagues, all those co-workers, family members, they always may doubt or throw shade on you. They, oh, you can't do this. Why would you want to do that? Blah, 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 blah. That's too hard. It's too risky. You really gotta bathe your mind from all that filth, all that crap. So 5 minutes a day. It takes me, let me show you. I was about to say, it takes me 5 minutes a day just to take a shower. So just take you 5 minutes a day to shower your mind. But whatever time it takes you to take a shower, that's how much time you should be devoting towards improving yourself where your craft is concerned. All right, that's enough As always, guys, it's to your success. Continue to earn passively, live passionately. Peace.